Silver just put in one of the most explosive years in modern history. It didn't just grind higher, it ripped hard, and it left a lot of people flat footed. And when a move like that happens, there are only two possibilities. Either it was a one off hype cycle, or it was the beginning of something much, much bigger. So the real question now is simple. Could silver actually become the investment of the year again in 2026? Because right now, silver is sitting inside a perfect storm. On one side, you've got explosive industrial demand, EVs, solar, grid expansion, batteries, all scaling at the same time. And on the other side, investment demand is waking back up in a world where currencies are quietly being devalued year after year. And when those two forces collide, historically, the chart doesn't stay calm for very long. But before we go any further, I want to say something important. You've probably seen the wave of AI generated avatar videos about silver lately. And look, some of those early videos actually helped people learn. But recently, anyone could paste a script into an AI avatar. And a lot of hype, sloppy math, and flat out bad information has started creeping in. So this isn't about attacking a person. This is about protecting you from noise. Always verify data, always check sources. Don't let an AI character do your thinking for you. So here, we slow down. In this video, we're going to look at silver like adults, through supply, demand, and hard numbers, not hype. We'll break down what actually drove the last move, what's changing in 2026, and whether silver truly has the fundamentals to deliver again. No fear mongering, no fairy tales, just data and the market. Let's get into it. Silver just had one of the biggest upside runs in its modern history. 2025 was explosive. And what's really interesting is that this wasn't driven by hype or memes or retail mania. This was structural. And now, as we move into 2026, a lot of people are asking, is this the end of the move or is this just the beginning? And the answer, like most things in the markets, it's that it's complicated. Because there are some very real forces pushing silver in opposite directions right now. And they don't have anything to do with headlines. They're institutional, mechanical, and calendar driven. So in this video, I'm going to walk through those forces with you, what's really happening behind the scenes, and why, in my opinion, this bull market still has plenty of structural support. Let's start with window dressing, which is something most retail investors never really think about. At the end of the year, portfolio managers want their books to look good on paper. Basically, the weak names get sold, the strong performers get added, not because they suddenly change their outlook, but because basically nobody wants to send their investors a year-end statement showing them, hey, we missed the winners. And silver was actually one of the winners. And so what we see is real-time buying pressure into year-end that has nothing to do with retail hype and has everything to do with how institutional reporting works. That's window dressing. But now, right now, coming up in 2026, as we start the year, we run straight into the opposite force, commodity index rebalancing. Silver has had a run so far, so fast, that it essentially has grown to around 9% of the Bloomberg Commodity Index. But the target weight for the index for silver, it's closer to 4%. And index tracking funds are required mechanically to sell down exposure to match that target weight. Not because they believe less in silver, not because the fundamentals have gotten weaker, but simply because the rules say you now own too much silver, reduce it. So we get this forced selling wave, structural buying followed by structural selling. Then you've got another layer of selling, and this comes from tax behavior. A lot of investors, especially the larger ones, they've been delaying the selling of their winners like silver until 2026, so that basically their gains fall into the next tax year. Silver has been ripping higher for months now, so there's a huge unrealized profits that are just floating around. Now the calendar flips 2026 and suddenly people hit the sell button. Again, it's not bearishness, it's just a strategy based on deferring taxes to 2026. So think about all of this stacked together. Coming into the end of 2025, you had institutional buying to dress up the portfolios. And now, the beginning of 2026, you have those two selling forces of the index funds selling to rebalance. And then you have the tax deferment sales rolling into the beginning of January. All of this is happening at nearly the same time. This, of course, is going to create volatility. But remember, volatility does not necessarily equal weakness. The medium term structure is essentially still bullish. And I'm now starting to see on Wall Street Bets. Remember, Wall Street Bets, it's about 20 million members in there. And they love leverage, they love margin, they love call options. It's going to be very interesting. It will be very interesting to see prices hold up in silver or even rally with those two ladder selling pressures happening at the same time. That would be incredibly bullish to see that. When you zoom out, the big picture hasn't changed. Supply's tight, industrial demand keeps accelerating, investment demand is rising, and nobody trusts the monetary future. This isn't a bearish setup. I guess short term noise, yes, but end of cycle behavior, no. Bull markets don't end because simply the calendar flips. They end when fundamentals weaken. And I mean, right now, that hasn't happened. And what we're seeing is consolidation. We're seeing weak hands getting shaken out, and long term holders are simply continuing to accumulate. I've mentioned this before, not even looking at the 1980 peak, but simply looking back at 2011. Silver ETFs peaked at nearly 1.8% of all ETF assets. And today, silver ETFs represent approximately 0.3% of all ETF assets. So just a fraction of 2011. This doesn't look like the end to me. So now take a look at this. What I have here is a CNBC caption of a bubble headline for silver. So essentially, during the entire run up in silver in 2025, the mainstream financial media has barely mentioned it. No attention, practically nothing. But the moment silver finally makes the big move, suddenly this is the headline: Silver Bubble. They didn't cover the rally, they didn't explain the fundamentals, they didn't talk about the setup. Now they're just showing up afterward, slap a bubble label on it. And people sometimes tend to take that serious as analysis. This is why you need to understand the mechanics yourself, because the coverage clearly isn't driven by informed perspective. Libertad aficionados, today we're beginning coverage on the 1 ounce silver proof series. If you thought the brilliant uncirculated were rare pieces, well, these are ultra rare. And I'm just showing here on the screen the top 5 in terms of mintages on the 1 ounce silver proofs. The 1983, which is the showcase piece today, it ranks number 3 at 998 mintage, only surpassed by the 99, which has 600 mintage, and the 98, which has 500 mintage. And we're not even going to talk about these modern engineered scarcity releases. Yes, that 2025. And then just for clarity, that 2019 and that 2020 mintage there is not the regular proof. That's actually the reverse proofs. Those are all of those are very low mintage actually, and I believe they're undervalued pieces still, even though they've had a slight surge in prices in the last couple months. You'll notice here on the picture on the corner that I have 3 distinct 1983 1 ounce proofs, and NGC essentially has a non-variety version, which is the 83. Then they have a quote-unquote double die reverse, and then they have a triple die obverse, which is a mistake because they actually didn't meant to say triple die reverse, but when NGC makes a mistake, they don't like to correct and they'll drag along with the mistake. And so what I'm showcasing here is essentially 3 microscope shots, and each of them are from the 3 different coins, allegedly 3 different varieties. But when you're actually comparing them side by side, I focused in on the same section of the coin. It's very much essentially the same and other elements of the coin. But when you're comparing them side by side, they all show the same double die characteristics. It was actually one of the things I first learned when I started collecting the proofs. A lot of longtime collectors said all the 83s are double die. And I mean, this is basically a combination of the 1980s Mexican mint quality control or lack thereof. And then in terms of that triple die overs, when grading terminology, once they establish it at these grading companies, they just never get revisited and they don't revise it. So, yes, there are variations technically. And if you're in the NGC registry for the points, each of these 3 count for points, but they're all 3 basically. They're all double dies, all of them. And finally, dollar value. Let's look at the price comps. With only 998 of these coins ever minted, you don't see public market sales data often. I mean, I looked at the eBay sold comps just earlier today, and there was nothing in the last 90 days. They essentially wipe out anything older than 90 days. Um, so most transactions that I've noticed are in private Facebook groups and other websites like Heritage. So what I've personally seen for a PF67 to a PF68, I've been seeing values somewhere in the range between 2 to 3,000 for one. And if you're talking about the top pop 69 at NGC, well, sometime I think it was in the late summer, if not midsummer, at Heritage, including the buyer's premium at Heritage, a buyer also has to pay a premium. It's not like eBay where a seller just pays the fee. On Heritage, a buyer has to pay a fee. And including that fee on Heritage, a PF69 sold for $6,200. So that's what real scarcity looks like when we're talking about the proofs: low supply, quiet demand, and really, really strong prices. Hope you enjoyed this video. Don't forget to like, subscribe, and leave a comment if you have any questions or something that drew your attention. I forgot to mention something earlier. The other thing I remember about 2011 that's not happening today with big online merchants like Apmex, it was around February, mid-February or so in 2011. The retail demand was so high for like American Silver Eagles, for Silver Maple Leafs, Kookaburras, Silver Pandas. It was so high that Apmex had buyback prices on the items right on the screen, and all the buybacks were above spot. So retail demand was so strong that the online dealers like Apmex were willing and able to buy back above spot and sell for even significantly higher than spot. And we're not seeing that at all today, right now. If you're getting one of these quotes from Apmex right now, they're paying you for Eagles. They're paying below spot. And we're not seeing that yet. So I think the big rush is still to come.